Good evening, and welcome to the nightly market brief for Friday, June 12th, 2026. The global macro grid turned in a massive Day 2 continuation session as international capital flows aggressively locked in this week's structural shifts. Looking directly at the stock indices, the massive relief rally expanded during Friday's session. The primary fundamental driver was the continuous unwinding of corporate operating costs as crude again moved lower. The reality of a fast-tracked peace agreement with Iran, which legally clears millions of barrels of crude to hit the market in exchange for halting future enrichment and surrendering their uranium stockpiles, is officially being treated by macro desks as a permanent, long-term cap on global energy inflation. Compounding that structural tailwind, the spectacular SpaceX public debut ignited a fire under tech counters. SpaceX closed up nearly 20%, with a market value passing $2.2 trillion. This historic listing completely proved that institutional liquidity pools remain incredibly robust, keeping buyers highly aggressive right into the closing bell. Moving over to the metals corridors, the sudden collapse in global energy inflation triggered a massive, synchronized short covering squeeze that ran in harmony with indices. Precious metals faced heavy, relentless accumulation throughout the session as multi-asset platforms aggressively rotated capital back into hard assets to guard against long-term stagflation risks. Industrial copper and platinum tracked right alongside them, remaining firmly supported by tight global warehousing buffers and looming import tariff anxieties. In the energy lanes, the physical reality of the lifting Iranian export sanctions completely altered the market's underlying pricing structure. Trading desks spent the afternoon systematically reducing the geopolitical conflict premium out of the front delivery months, forcing a major downward correction across the petroleum complex and pinning crude values to the floor of the daily range. Concurrently, main currency corridors posted modest gains against the US dollar as international asset allocators balanced out shifting transatlantic trade metrics. Inside the crypto complex, digital assets limped higher with the broader equity markets. Bitcoin experienced a wave of sympathetic short covering as automated execution scripts covered near-term shorts to match the massive risk-on rotation sweeping through global risk assets. This relief rally was heavily accelerated as the structural institutional spot ETF outflows that fueled the recent correction finally showed signs of fatigue. Now that the forced fund liquidations for the SpaceX capital raise have successfully cleared the wire, the door has opened for renewed accumulation across main ledgers. Meanwhile, the interest rate grids faced intense defensive adjustments. Fixed income desks began skeptically pricing in the easing inflationary pressures from the energy sell-off. But the paper grids remained extremely nervous heading into next week's Federal Reserve statement. Compounding that anxiety, the added uncertainty surrounding the incoming Fed chair, Kevin Warsh, added fuel to the market's forward curve calculations. Finally, agricultural and soft commodities turned in a weak session that ran entirely on supply chain improvements. Grain corridors faced heavy overhead selling because updated weather maps confirmed excellent Midwest crop progress. But the downside accelerated as the massive drop in crude oil aggressively drove down forward farm and energy production costs. Also, on the soft side, cocoa and coffee contracts consolidated within highly controlled boundaries, completely ignoring the geopolitical noise sweeping through the financial space. To see the opportunity and the trends we're tracking, click directly on the live charts linked on this page. For more on how to qualify tradable trends and the strategies to capture them, here is Knight's senior analyst, Alex Storn.
Thanks, Michelle. Today was a very nice way to close out the week, with extreme macro fundamentals continuing to generate beautiful moves across the board. On the day, gold moved up by more than 3%, and silver more than 6%. In direct contrast, the binding Iran settlement pushed crude lower by more than 3%, dragging gasoline down over 2%. Stock indices grinded higher, with the S&P, Nasdaq, and Dow all up by a little over 0.5%. With the steep sell-off in energy and the massive euphoria over the SpaceX offering, I'm actually surprised we didn't get more on the upside during the session. Tonight, I'm going to cut straight to the chase and show you a simplified procedure enabling you to quickly qualify the pain-to-gain ratio of any of the 40 markets linked. When you land directly on our active analysis page, our simplified trading rules are clearly laid out right at the top of the workspace. Looking down the master grid from left to right, we provide you with everything you need to quickly define a market. You get contract specifications and margin requirements, followed by links to the 5-day hourly EMA charts to quickly define the short-term trend. Next are the 9-month daily charts for the intermediate trend, then the weekly for the long term. Next, the opinion, providing 13 separate technical indicators in the overall strength of the trend, followed by support and resistance calculated 10 separate ways. Finally, futures and options quotes, enabling you to price out defined risk strategies like premium neutral collars. We have done all the heavy lifting on one single page, so you can quickly qualify these 40 markets yourself. Now I'm going to show you several charts and let you judge which ones you think would generate you the best pain-to-gain ratio. Let's look at the don't trades first. The absolute primary objective of trading is to make money. But most speculators destroy their capital by breaking the most basic rules of the tape. They fall in love with one specific market or sector, they fight dominant momentum, and they limit themselves by only trading the long side. Ask yourself an honest question. If you had the choice of trading Bitcoin and losing money, or trading lumber and making money, what would you do? A real trader doesn't care about the name of the ticker. We don't get emotionally attached to an asset class. The biggest capital trap in this environment is listening to subjective commentary. Look at the data. Next week, you can choose to listen to some media hack on television who doesn't have a single position on the board and operates with an unknown agenda. Or you can look right below this video at the $13 trillion wall of open institutional positions pricing the forward interest rate curve. Which one of those do you think is going to be right? Stop wasting your energy trying to figure out what a headline might say next week. When you trade on subjective opinions, you end up trapped in dangerous, non-directional congestion. To see exactly how these traps bleed capital in real time, look closely at our first unqualified chart on the screen right now. This 60-minute tracking grid for September gasoline shows you that exact mechanical failure. Notice how the price action repeatedly cuts back and forth through our short-term red line and the intermediate green moving average. The tape moves up toward 3.04, turns around and drops down to 2.84, and continuously reverses without establishing any clear directional momentum. If you try to trade this unqualified noise using a subjective breakout approach, you are stepping right into a capital trap. These frequent moving average crossovers create nothing but false signals, grinding down your account equity through constant whipsaws. There is simply no edge inside this range. Take a look at our next unqualified chart. The 60-minute 5-day chart for the Euro FX contract shows the exact same range-bound friction. Following an initial sharp drop early in the week, the currency corridor flattened out into an incredibly frustrating, low-volume sideways churn. For 4 straight sessions, the price action has pinned itself inside a tight horizontal channel, completely strangling any sustained breakout attempts. The red 10-period and green 40-period exponential moving averages have flattened out entirely, tangling together to generate endless false crossovers. Subjective macro accounts trying to play directional momentum here are simply bleeding out their risk capital on random chart noise. There is zero structural trend conviction, zero edge, and absolutely no reason to deploy trading capital into this range. Take a look at our third unqualified chart. This 60-minute 5-day chart for the US dollar index continues the exact same pattern of choppy, flatlining price action. After a sharp flush early in the session, the index completely lost all structural velocity. For the last 48 hours of the trading week, the price action remained tightly bound inside a narrow, vertical band with absolutely zero directional slope. The red 9 period and green 36 period exponential moving averages are weaving straight through the middle of the candlesticks, tangling together to generate endless false crossovers. Trying to deploy size into this messy, sideways congestion means you are simply gambling on random noise. There is no sustained momentum here, no mechanical edge, and absolutely no reason to chase it. Take a look at our final unqualified chart. This 60-minute 5-day chart for Ethereum highlights our final untradeable setup. While other assets managed to build some directional drive, Ethereum completely flatlined into a frustrating range-bound trap to finish the week. Look at the entire right side of the chart grid, from June 11th straight into the close. The price action is tightly bound in a narrow, horizontal box, and the red 6 period and green 30 period exponential moving averages have completely flatlined, tangling together at 1664. Trying to force a trade into this choppy, low-velocity consolidation is a guaranteed way to get chopped to pieces by false signals and minor intraday reversals. There's no trend definition, no institutional momentum, and absolutely no edge here. Now, let's leave the traps behind and look at what happens when a market qualifies as a clean, tradable trend. This 60-minute, 5-day chart for gold shows you the exact contrast of a textbook trend reversal breaking out of a massive weekly floor. After an intense liquidation run slammed prices down to a clear double bottom near 40.40, the market experienced a structural shift. The short-term red 5-period exponential moving average crossed sharply back above the green 25-period line, instantly signaling a change in trend direction. Notice how the price action behaved after that crossover. The market formed an orderly stair-step pattern upward, consistently treating that rising red line as firm, dynamic baseline support, right into the weekly settlement at 42.39. This structure provides a definitive mechanical edge with zero subjective guessing. Take a look at our next clean chart. Moving down the metals desk, this 60-minute 5-day chart for October Platinum traces another clear, data-verified trend reversal. After a prolonged markdown phase finally exhausted its selling pressure near 1660, the tape established a firm structural base. The red 5-period exponential moving average crossed cleanly above the green 25-period line, instantly shifting the directional bias to the upside. Notice how the market used that rising green average as solid defensive baseline support on every minor intraday dip, keeping the price action stable and pointing higher into the weekly settlement at 1738. This is how you systematically isolate an active lane with clear parameters. Take a look at our next clean chart. Shifting completely away from metals, this 60-minute 5-day chart for December coffee demonstrates a classic V-bottom trend reversal in the soft commodities. After finding a hard double bottom down near 232, the near-term red 12-period exponential moving average crossed cleanly above the green 42-period baseline. Notice the flawless structural symmetry that followed. The market printed a beautiful rising staircase of higher lows, treating that short-term red average as dynamic support on every single minor pullback, to finish the week right at 247. Our parameters take the emotion out of the equation and hand you a clear directional roadmap across any asset class. Take a look at our final clean chart. To close out our tracking log, this 60-minute 5-day chart for July lumber shows an immaculate picture of a powerful structural trend continuation. Following a clear moving average crossover early in the cycle, the red 8-period exponential moving average completely separated above the green 32-period baseline, locking the price into a beautiful upward slope. Notice how every single minor consolidation pattern found immediate buying support right against that rising green baseline, driving the price straight up to settle at 622. This chart shows you exactly how a disciplined trend system shields you from the emotional traps of the market, offering clear parameters and a mathematical edge. What we just walked through on these 60-minute charts is simply the tip of the iceberg. This is just one single time frame inside one of the many systematic programs we actively trade across this desk. To survive and thrive as a speculator, you have to stop playing profit, maintain absolute discipline, and be positioned to capture these trends exactly as they break, both long and short. Ask yourself another golden rule of risk management. Would you rather be out of a market wishing you were in, or in a market wishing you were out? We have done all the heavy lifting to lay out the raw trend data right on this analysis page, so you can rationalize the logic behind these movements for yourself. But tracking the tape as these trades occur is only the diagnostic phase. To land true whale performance, you have to automate the execution grid. Our team handles all the daily grunt work, placing the entries, managing the stops, and automating the entire pipeline using Chart VPS and CQG integrated client to completely eliminate human fear and greed. We route our operations exclusively through premier exchange members worldwide to guarantee total price transparency, the ability to utilize United States Treasuries to satisfy margin requirements, and guaranteed liquidity back to your account within 2 to 48 hours in any major currency. Contact Peter directly using the terminal links below to explore the benefits of putting our professional team to work directly for you. Please note, due to regulatory jurisdiction and financial status disclosures, we may not be able to accommodate your account. But if compliance restricts us, we can refer you to a capable, fully licensed broker in your regulatory jurisdiction who can. Thank you for watching. Good trading, and we'll see you right back here after Monday's regular session settlement.